So why crypto?
So why crypto?
So why crypto?
So Why Crypto? Featuring Vishal and Quay.
Greetings and welcome to another edition of So Why Crypto, where we look at crypto as technology. My name is Quay, and as always, my co-host Vishal. Today we're going to conversate about crypto as a technology and focus a little bit on money, talk a little bit about Bitcoin, but we continue to bring you the experts, the best of the best in the field. And Brian Estes is here with us. Welcome.
Thank you. Thanks for having me.
And we're glad that you're here. And we also, can you tell all our fans and listeners about yourself?
Sure. Brian Estes, I'm the CEO and CIO of Off the Chain Capital. We're a private investment fund managing about $200 million for about 200 limited partners. Fund's been around since 2016. Prior to that, I started in blockchain back in 2014. I was one of the first investors in a company called Coinbase. I was also a paid advisor to the company, helped develop the user interface there. I seeded a company called Polychain, which is the largest venture capital firm in the blockchain space back in 16. And then also back then, made early investments in a startup called Digital Currency Group. And DCG owns the Grayscale funds, which is Grayscale funds are the largest asset manager in the world in the blockchain space. Prior to that, I was in traditional asset management, managing money for endowments and foundations. And then way before that, I was an institutional equity broker. So I had a long career in traditional finance, but in 2014, I learned about this weird thing called Bitcoin, and I totally jumped over to that train.
And so you already said some dates, but we both remember that day and that time when we got into that crypto space, and we're just minds were blown. Do you remember that exact day that you got crypto pilled?
Oh yeah, yeah. So it's so I first learned about Bitcoin in early 2014. I saw Cameron and Tyler Winklevoss on CNBC, and they were talking about Bitcoin when it was $100. And coming from traditional finance, I thought it was just a total scam. I was like, what are these guys doing, like a pump and dump scheme? What's going on here? So I put it on my watch list because it just seemed kind of interesting, this internet money that was out there. And so I watched it go from 100 up to 1,200, didn't own it. And then the largest custodian of Bitcoin in the world, Mt. Gox, got hacked. And a Russian hacker stole 850,000 Bitcoin off the exchange. And you have to remember, back then, there were only about 14 million Bitcoin. So, it's like a huge portion of the world's Bitcoin just got stolen. And Bitcoin crashed from 1,200 down to 300. I've always been a value manager. And so when it went down 70%, that's when I got interested. I was like, well, since it's down, maybe there's some value opportunity there. And that's when I started diving into what is this? I got curious, I needed to figure this out. And I read the Satoshi Nakamoto white paper. The first time I read it, it really didn't resonate with me. The second time I read it, it started the fog started to clear. And then about a week later, I read it for a third time. And that third time I read it, it just clicked. I just understood how we were going to use this technology to rebuild our financial system and take it off the traditional banking and credit card system and move it on to this blockchain technology. Right. And that's when I couldn't sleep for about a week after that clicked. And I would lay in bed and my wife would yell at me, why can't you sleep? And I was just, I had heat radiated off my body. I was so excited because I just understood what was about to happen over the next 50 years. And so I told her, I have to stop doing what I'm doing and go do this blockchain thing. Right. And she thought I was crazy. And we worked out an arrangement where she got comfortable with that. And then I sold my practice to Wells Fargo Advisors and started building blockchain companies.
Wow. And just like, so I understand this a little bit more and tell the audience, you have a computer background, computer science background, a finance background, but there was still something that third time that checked boxes for you. Like, what was it? What was that thing where you're just like, oh, I got to go on this. Like, my body heat.
Yeah, so it's like a puzzle, right? You have a bunch of pieces. And so the first time I read it, I put a couple of the pieces together, but I couldn't see the whole picture. And then the next time I read it, a few more pieces came together. And then the third time I read it, like I finally like saw what the picture was. I understood. And so that's probably the best way to explain it. It was just, I couldn't understand it the first time. And I tell people that even today, like, you have to spend a good 40 hours to really understand what Bitcoin is. You don't get it the first time, no one does. And you have to, but people are so busy, like everyone's, busy, working, paying bills, raising kids, doing their thing. And since it doesn't come easy to them and it takes time, takes a time investment to understand it, a lot of people just don't understand and they don't want to commit the time to doing it. So one of my callings is like just to tell people like spend the time, you can go to hope.com. So Michael Saylor owns that website, and he donated it to Bitcoin education basically. So if you go to hope.com, there's all sorts of educational videos and material there, and spend about 40 hours and you'll get it, you'll understand it.
Awesome. Well, Bitcoin is a puzzle. That's a first time.
Yeah.
That's a good way to sort of like, all right, you got to figure out the puzzle. It sounds very much like how you hear the stories when people first get on the internet. Like, what is this thing? All right, well, maybe I'll use it for email. And then it began to like, oh, there's going to be this commerce thing. Michael Saylor owning all these domain names and whatnot, seeing this potential in this particular space. But now you see that our commerce is just moving over there. It's a little bit like that because when you first look at it, I even remember in the 90s, I was young. I was like, what is this thing? And I remember the first time going to AOL.com, was like, hold on, I'm talking to someone in Australia? Like, it takes a while to kind of connect the dots. It's the same way, I think, you put a Bitcoin in as a puzzle. That's somewhat similar. I think a lot of people call it's the second coming of internet in a way. Maybe even bigger. Some people second coming of money, and we'll talk a little bit more about that. But thanks for sharing that. And we'll link note the hope.com. I haven't checked it out myself, so we'll definitely take a look at it as well. Next thing we want to talk about is just money in general. I know when people talk about crypto, most people think about money, but not many people understand it. They take it for granted what money is. And the way I understand it, it's just a technology for people to achieve what they want and need. I think a good place to start would be the history of money. You want to give what your understanding of the history of money is, where we come from and up to this point. Just a brief history. I don't want to go too deep into it.
Yeah. So we'll start at the beginning. So
Sure.
So we as humans, 10,000 years ago, we lived in tribes of like 100 to 150 people, and whatever the scarce commodity was in that local area, that's what defaulted as our money. And so, for example, in some communities, it was like shells or rare stones, or like over in Africa, it was like glass beads. And so that's what we would use for commerce or to store our value. And so the problem with that is that if one community would travel, like say 20 miles and try to do trade and commerce with another one, and one was using shells and the other one was using glass beads, like, there's no commonality there. There's too much friction. And so we as humans defaulted into a gold and silver system 3,500 years ago. So 3,500 years ago, we as humans are like, hey, all over the world, there's gold and silver. And if you have an ounce of gold and you have an ounce of gold, then we know what those are worth, right? Your ounce of gold is worth like, 20 cows, and my ounce of gold is worth 100 like clay pots. So we could we could figure it out. We could figure out how to do trade based on that. And so the world was on a gold and silver standard for, for the next 3,500 years. And then what happened about 1,000 years ago, in the 11th century, the Chinese invented paper money. And paper money was the next layer of gold and silver. So you would deposit, so it's kind of cumbersome to, use gold because it's hard to divide and it's heavy. It's, it's just, it has some negative attributes to it. But paper money was better. It was, easily, you could have different denominations of paper money. It was more portable than gold, more transferable. So we started using paper money. So we would deposit our gold and silver into banks or depositories. They would issue out notes based on that, and then we would trade those notes for money. And that, that worked for the next 1,000 years. But in the 11th century, or so, in 1971, President Nixon in the United States severed the tie between gold and the US dollar. And then all the other countries followed after that. So over the last 52 years, our money hasn't been backed by gold and silver anymore. It's just backed by the full faith and credit of the country that issues out that money. And that system is failing. You see it in Turkey and Argentina and Zimbabwe. And, this fiat system is cracking. It's all based on trust. And if you lose trust in your government, the money's going to be worthless. And so that's what's happening, is that people are losing trust around the world in their governments. And eventually, people will move their money out of fiat money, which is government issued money or money by decree. That's what fiat means, by decree, into something that's more commodity based, which we as humans used for 3,500 years or 10,000 years, right? And so no one has to force us to move our money into commodity based money. We as humans individually and collectively will make that choice. And so for some people, they're moving their money out of fiat into gold or out of fiat into Bitcoin. Bitcoin is a commodity. And so you could think of it as, a digital version of gold. And Bitcoin's actually better than gold because it's more portable than gold because it moves through the internet. It's more divisible than gold because you could go out 8 decimal places. And, it's just a better form of money. It's the best form of money humans have ever created. And only about 1% of the world understands that today. And as the rest of the world understands this, they'll take some of their government money and they'll convert it over to Bitcoin, and they'll use that to store their value, just like we as humans stored our value for the last 10,000 years in commodity-based money.
Got it. Well, thanks for giving us some history.
No,
That's great. You gave us some background.
real quick, I just want to follow up on something you said. You said 1%. Only 1% understands the history of money. Is that
only 1% of the world understands Bitcoin right now?
Bitcoin? I would say only 1%
around the world is 1%.
Yeah, I would say only 1% understands where money even comes from too. It's like hearing this story. Like, there's no way in history classes that people, teachers were given that information.
No, exactly. They don't teach
crazy.
that.
Yeah,
they don't teach it. I wasn't taught that in high school, or I have a finance degree and economics degree. I was never taught that.
wow.
Yeah, I went to University of Cambridge, and I didn't. They didn't teach us that there either. I have an MBA from Washington University. I wasn't. So no, it's not taught. And so you have to go out and you have to find the resources to understand what this is all about.
Yeah. Well, thank you though, but for sharing, because there's a lot of people
It's
that
not
need
taught.
it.
So the government doesn't want people to understand what money is, because it's kind of a sham.
Yeah.
Well, I can echo that. Yeah, definitely go to college. I have a finance degree and been in finance for 20 years. It's not something talked about. It's just like, this is a system. Let's just use it. I think understanding is the first step to the liberation, right? Whether it's going to be the Bitcoin standard one day, or part of the world is going to use Bitcoin. However that's going to look like. I think understanding is the first point. That's why you're seeing the experiment in El Salvador. I think that's going to be fascinating to see how that unfolds in the next few months to
Well,
years.
look how it's
or whatever.
unfolding already. I mean, crime is down, GDP's up. I mean, it's going in the right direction.
Great. So one other thing I would like to bring up some functions of money. So you got store of value, medium exchange, and unit of account. Those are three functions of money that are described throughout. You can look at from all the way from shells to glass beads from Africa to fiat money, gold standard, all these things. So these are the three functions that some form of money does it better than other. That being said, one of the things we want to roll into is Bitcoin. I believe that's the best place to understand crypto because it just takes the fundamentals are so clear in Bitcoin. So I think we should just start there. How would you explain Bitcoin to a smart 12-year-old? What Bitcoin is? I'll let you take it.
So you mentioned something a while ago, like you mentioned the characteristics of money. So what you mentioned were the characteristics of currency. So to be a unit of account, you need, that's currency. So we all have to agree that something's worth X, right?
Mm-hmm.
So Bitcoin it's way too early for Bitcoin to be a currency because if 99% of the world doesn't accept it, then you can't really use it, right? So the U.S. dollar today is the best form of currency because around the world dollars are accepted. And as the rest of the world, it's probably going to take 20 to 50 years for the rest of the world to understand what Bitcoin is. Then I would say in 20 to 50 years, Bitcoin will be a currency. But today it's not. Today it's really, a digital version of gold. It's like
so store of value, you would say.
Store of value. Mm-hmm. Yeah, I look at it as like a savings account. So here's how I look at it. So we spend our time and our energy and our talent to go out and make money, right? To make currency, right? You get paid. You're getting paid to do this podcast. You're taking your time and your energy and your talent that you have, and you're converting that into dollars or pesos or some sort of government currency, right? The problem with that is that the central banks print more dollars every year, right? Or the Mexican government will print more pesos every year. And so that problem is that if you look over the last 52 years, the US government has printed, and this is the Federal Reserve, has printed 7% more dollars per year on average. So if they're printing 7% more, they're basically stealing 7% of your time and your energy and your talent every year because you can't print your own money. You have to go out and spend your time and your energy and talent to make money.
Mm-hmm.
And so the current system that we have, I think it's immoral. It's based on theft. And so a more moral system would be you take your time, your energy, and your talent, you convert it into these government dollars, and then you take the government dollars and you convert them into something that actually holds its value over time. And Bitcoin, I think, is the best form of store of value that humans have ever created because in the computer code of Bitcoin, the maximum amount of Bitcoin that could ever be created is 21 million. And there's no maximum amount of US dollars that could be created. And so right now there's $31 trillion worth of government debt, US government debt. There's $120 trillion of unfunded liabilities that are need to be paid over the next 30 years. So these are government pensions, military pensions, Social Security, Medicare. If you add all these promises up, and it's 120 trillion. So where does that come from? Well, the government's just on print it. There's on print more dollars. So in 30 years, instead of 31 trillion, we're going to have $150 trillion worth of debt. And as more and more dollars get printed, it's stealing more of your time and energy and your talent. So you have to store that somewhere. And like I said, you could store it in real estate, you could store it in gold, But I think Bitcoin's the best choice because it's hard to move gold. It's hard to move. You can't move real estate. It's not like you can take a piece of land and move it, somewhere else. Bitcoin moves through the internet, speed of light. Settles in 10 minutes. You could leave your country and take it with you. You can memorize your private keys or memorize your seed words and have your Bitcoin in your head and just walk. You try to walk out of the country with $1 million worth of gold. They're not letting you out. So you could have $1 million worth of Bitcoin in your head and they would never know it. So
That's great. So one of the things I remember you explaining that, Ledger is a really old technology. When I go read about, the history of money or humankind in general, like you see the first thing that you see humans have written are ledgers. They're so essential, fundamental to humanity. One of the way you explain it is like, it's old technology, so it's just a ledger that's updated every 10 minutes. There's about 10,000 different nodes that are doing it to keep everybody accountable and honest. Like, here it is. Here's the accounting of it. Would you add anything to it?
that's a good analogy. Yeah, so let's look at the history of ledger technology. So about 500 years ago, Leonardo da Vinci invented this ledger technology. And that's what we use today for our accounting. The Medici family over in Italy incorporated this ledger technology into starting the first banks in Italy, like 560 years ago. And that's what created the bond market and insurance companies and everything that followed in traditional finance after that. And that's the technology that we use today. We still use ledger technology. So for example, if I have a Bank of America account, you have a JP Morgan account, when I move money from my account to your account, the Bank of America ledger moves money over to the JP Morgan side, and then JP Morgan has to update their ledger and Bank of America updates their ledger, and then they have to reconcile with each other to show that that money was transferred, right? So that's just ledger technology. Bitcoin is the same thing. Bitcoin's using ledger technology, except that instead of having a JP Morgan and a Bank of America ledger that has to be reconciled, you just have one universal ledger, which is the Bitcoin ledger. And so the Bitcoin, just moves inside of that one ledger, and that gets updated every 10 minutes. So there's no reconciliation that needs to occur. And when there's no reconciliation because it's all the same ledger, then that's what the value is. That's what the strength of the Bitcoin network is because there's no way to fudge the numbers. JP Morgan and Bank of America, you have to trust them that they're not fudging the numbers. And that's why they have audits. Outside firms come in and audit these firms to make sure they're not fudging the numbers. There's no way to fudge the Bitcoin network. It's protected by cryptography. It's updated every 10 minutes. There are thousands of computers around the world that are updated. They're all sharing the same code and the same information. So there's no way to fudge the numbers. And so you don't even need to audit Bitcoin because it's one universal ledger that can be trusted. And that's where the value comes from, is the trust. And as more and more people trust government money, less, that value is going to accrue, in my opinion, into Bitcoin. And so as people trust Bitcoin, as it continues to be safe and secure over the long run, then the value of Bitcoin will increase.
Good. One thing I want to go back on is, well, first of all, you're the first one who really distinguished that. Let's not talk about the functions of currency. It's really the focus is store of value right now. Then you can look at what's a Bitcoin is about 500 billion market cap, give and take. And then you got the store of value in gold is around 10 trillion, maybe a little bit more than that now, depending on inflation and whatnot. Do you see that being like the next big milestone for like Bitcoin to capture and become like the market cap around $10 trillion and like, okay, well, it's pretty much equivalent to store of value with gold. Have you looked into that? I'm kind of curious to hear your thoughts.
Yeah, there's actually a model for that. It's called the stock to flow model. So if your listeners Google Plan B or 100 trillion USD, you'll see the Plan B models out there, the stock to flow models. And so these models weren't invented by me; they're invented by the Plan B who built these models. But basically, what they say is that exactly what you said. You could equate Bitcoin to gold and other scarce commodities like diamonds or silver or platinum, palladium. And so when you plot that out on a chart, and actually you can't see it, but I have a painting right in front of me of the Plan B model. And so basically what it says is that right now gold is the scarcest asset on earth. And the way you measure scarcity is you take all the gold that's ever been mined throughout human history, that's the stock, and you divide it by the flow. And the flow is the amount of new gold that gets mined every year. So if you take the stock divided by the flow, it comes up to a 60-to-1 ratio. Okay. Bitcoin's stock to flow ratio today is 57-to-1. And so gold is the scarcest, Bitcoin's the next scarcest. And then if you do diamonds and silver and platinum and palladium, they're not as scarce as Bitcoin and gold. Okay. So part of the Bitcoin network, though, is that approximately every 4 years, the amount of flow, the amount of new Bitcoin that gets generated, gets cut in half. And in around May of 2024, the newly issued Bitcoin that comes out every day, every 10 minutes, that gets cut in half. So the stock to flow for Bitcoin is going to go to 114-to-1 in about 2 years. And when that happens, and it's 114-to-1 and gold is 60-to-1, Bitcoin's the scarcest asset on earth in 2 years. And if Bitcoin's gonna be the scarcest asset on earth in 2 years, then it should have a value equal to or greater than gold. And so, like you said, Bitcoin's market cap is around 500 billion today. Gold is 10 trillion, but Bitcoin should be 20 trillion in 2 years. Right. And if Bitcoin's 20 trillion in 2 years and there's 20 million Bitcoin, that's $1 million of Bitcoin. And that's what the model says. The model says at the end of 2025, Bitcoin should be $1 million.
Got it. This is based on data, and you get the stock to flow.
This model is 94% correlated to the historical price of Bitcoin going back to 2010. It's a very accurate model.
Cool. It's worth looking into. We'll put in the show notes as well.
Definitely.
So,
and the model also says in 2029, Bitcoin should be worth $10 million of Bitcoin too.
Okay.
And so I believe the model. I think the model's correct. The question is, what does $10 million buy you in 7 years? Right? I mean, that's a question. I mean, we see prices going up. You know, the reason prices are going up, it's not because of supply and demand, really. It's because of there's more money being issued. The amount of US dollars that have been created increased 40% over the last 3 years. And so that's why prices are up 40%, is because there's more dollars chasing the same amount of goods that are out there. So it just takes more dollars because they're not worth as much to buy the same thing.
Yeah, I lived in the Bay Area for 24 years, and it really echoed what people say: $1 million don't buy you the same thing anymore. You can't even get a house. Can't even get a house for $1 million. Yeah, exactly. So we talked about money, history of money, and Bitcoin. The next thing we want to kind of dive into, just crypto in general. I know, smart contracts is another really, really fascinating thing. I know you look at more than just Bitcoin. So we wanted to talk about it. It's something, me and Koy are looking into as a technology. So let's talk about that. I'll let Koy kind of set it up.
Well, speaking of networks, Facebook is a network, Uber, Airbnb networks, Amazon networks. And so they match users and providers and take a tool. Commerce is fundamental to society. Money is even more fundamental to society. So people compare crypto to the internet and others to money. That being said, is crypto, in your perspective, internet's second coming or money's second coming or somewhere in between?
Yeah, so you make a good point about networks effect. So, we've talked about history a little bit. So I just want to talk about a little bit of the history of networks. So if we go back to when the internet started 30 years ago, you could buy like domain names like Amazon.com or Coca-Cola.com or Nike.com for like, $15 to $25. And someone did that. Michael Saylor, who runs a company called MicroStrategy, he thought that was pretty interesting. He could buy Mike.com, he bought Michael.com, he bought Strategy.com, he bought Hope.com, he bought Voice.com. He bought all these words up that paid like $25 a domain name, and he sat on them. And so he sold Voice.com about a year ago. He bought it for $30. He sold it a year ago, sat on it for 30 years, sold it for $30 million.
Wow.
Okay. So why did voice.com go from $30 to 30 million over 30 years? And the reason is that back when he bought those domain names, there weren't that many people using the internet. There were like a few million people using the internet. Today, there are billions of people using the internet. So the network value of voice.com increased. And that's how you could think about Bitcoin. Right now, there's a few 100 million people in the world using it. And in the future, in 10 years, 20 years, there's going to be billions of people using Bitcoin. And because there's only 21 million Bitcoin, just like there was just one voice.com, as more and more people use the network, the more valuable the network is. And that's going to be directly reflected in the value of Bitcoin. And so that's why Bitcoin has value. It's network effects. Mm-hmm. And you could actually measure that using what's called a Metcalfe's law. So Metcalfe's law is how we measure the value of networks. Mm-hmm. And so we have a model where we square the number of users on the Bitcoin network. We multiply that times the transactional value going through the network, and it comes up with a model price. And that model price says Bitcoin should be worth about $41,000 today, and it's selling for like $24,000. So the model is saying that Bitcoin is very undervalued to where it should be.
Got it.
So are you also looking into other technologies like Ethereum, Solana, other smart contracts, anything else that excite you in this space as much as Bitcoin?
We are. So we own other digital assets. My favorite, and so this isn't financial advice. I just want to get that out there. Yeah. So we're a registered investment advisor with the SEC. So what I say is not financial advice for your listeners. But yeah, we do own other digital assets. My favorite is Binance, the BNB token. I think it's much better than Ethereum. I think Solana is also good. That's my second favorite, proof of stake protocol that's out there. Ethereum, I really don't like. I think Ethereum has issues. I just, it's centrally controlled. It's just, I don't think Ethereum is going to be the winner in the proof of stake wars. I think it's going to be Binance Smart Chain, which is represented by the BNB token, or maybe something like Solana.
That's rare that you hear that. I'm curious to see what are you seeing in Ethereum? Is it mostly because it's centralized?
It's not. It's not. It's not like if you look at Bitcoin, there's no one that controls Bitcoin. All the other ones are basically software companies, including Solana and Binance Smart Chain. But Ethereum is a software company, and just the SEC chairman Gensler just said over the weekend, Bitcoin is a commodity, and all the other ones are securities. So I think eventually Ethereum and Solana and Binance Smart Chain, I think they eventually get regulated as securities.
Got it. That changes quite a lot for the future. Let's talk a little bit about adoption. I heard you talk about that, crypto adoption. You were saying about 25% of U.S. households own Bitcoin. Maybe in the world it's about what? Oh, it's close to 50% now. Okay, and it's about maybe it's higher than 1% now from the last interview I heard as far as owning Bitcoin crypto. So one of the things you said was interesting that the adoption from 0 to 10 usually takes the same amount of time that goes from 10 to 90. Could you say more about that? That seemed like a very interesting.
That's called the S curve. So you could use that for all sorts of technologies throughout human history. You could look at shipping companies in the 1400s, railroads in the 1800s, automobile companies in the 1940s and 50s, computers in the 1980s through 2000. So it's the same adoption curve. And like you said, the amount of time it takes for a new technology to go from 0% adoption to 10% adoption is the same as it takes to go from 10 to 90. And so Bitcoin was invented in 2009. By 2009, in 2019, 10% of US households owned Bitcoin. And if you project that out, it means like by 2029, 10 years later, 90% of US households will own Bitcoin. And right now, the last survey I saw showed it was around close to 50% adoption in the US. So it's right on track, for that S curve adoption. So yeah. And you can use that for worldwide too. Right now it's at 1% worldwide. When it reaches 10% worldwide, which would probably be, if I had to guess, maybe 7 to 10 years. So that means it took 20 years to go from 0 to 10 of the world, right? Then it means it's going to take 20 more years for the rest of the world to go from 10% to 90%. So that would put us, say 20 years plus 7, you're like 2040. So in year 2040, 2050 actually, the 90% of the world should own Bitcoin.
Yeah, I mean, one of the one of the things that you see, as I'm studying money right now myself, that you see when it comes to U.S. that the mentality is really owning a lot of assets, right? So whether owning real estate, I know the U.S. government really helps with that by buying a bunch of treasuries. Then people owning assets like stocks and bonds and things like that. When you put Bitcoin as a store of value, is that the thesis as far as American households are really keen to put money into assets, and Bitcoin comes as another asset, and when people start to understand, that's where the adoption is going to be driven even faster than when it took 0 to 10 to 10 to 90. Would that be correct?
Yeah, so I think most people in the US look at Bitcoin as like a savings account, right? As part of a diversified portfolio. You don't want to have 100% of your money and your wealth in Bitcoin. You need to have a diversified portfolio. The question is like, what percent should you allocate towards this? And, if you're, conservative, I think 1% is probably the right number. So if you put 1% of your net worth in Bitcoin and you hold it for 10 years, and let's just say it goes to 0, right? So instead of, if your portfolio would have averaged 7.1% a year, now it just averaged 7%, right? It's that 1% divided by 10 is a tenth of, you lost a tenth of a percent of performance per year if it goes to 0. If it does what we think it's going to do, and the models say, and it goes to $10 million over the next 10 years, then all of a sudden that 1% is probably like 80% of your portfolio now, right? So it's that's a good asymmetric return where you could lose 1% or make like 80, right? I mean, that's a good bet. So, I'm not going to, recommend the proper asset allocation for people, but it's more than 0. 0 is, I could say 0 is the wrong number, You want more than a 0% allocation to Bitcoin. And so, you probably should talk to a financial advisor or like I said, go to hope.com, educate yourself, try to figure out what that number is. I would say, 10% is probably, on the high side, 1%, a real conservative number. So probably somewhere between 1 and 10 is probably the right mix. But, people have to figure that out for themselves.
Yeah. No, thanks. You mentioned hope.com. It reminded me of the question, one of the things that people think is either I'm too early, I'm too late, or, Bitcoin or crypto is a scam, or somebody's, is total maximalist, right? Like going 100% into it. One of the things I constantly say, what you said earlier, like, hey, spend some time understanding it. So hope.com is one of the other one source to go learn about it. Where else do you personally go to learn more about it? I know white paper and whatnot, but other things that you actually pay attention to? Just curious to hear those.
Yeah, you could actually take online courses through a company called Coursera. You take Princeton, University of Illinois, I think Cambridge has some courses that are free. But they're more about the technology rather than basically how it helps humanity. And I think Bitcoin is more than just technology. Just like we really don't know how like these things work, but we use them every day, right?
Okay. Yeah.
So like I don't even care how this works. I just care that it works when I want to text or call someone or pull up an app. And so I think of Bitcoin the same way. The technology is interesting, and we're so early on how we're going to take that technology and integrate it into our daily lives. One example is Venmo. Do you guys use Venmo at all?
Yeah.
All right, so Venmo is a blockchain application. It was started about 6 or 7 years ago. PayPal bought it, and PayPal owns Venmo, and it's based on blockchain, and it's free to use, right? We can use money, transfer money through Venmo because it's a low cost solution. So we use Venmo all the time, but most people don't know it's a blockchain.
No, I didn't know it either. Yeah, that's interesting.
So that's where Bitcoin needs to get. It's still way too early. It's kind of, you mentioned AOL earlier. Like, remember you said hook into AOL, you plug your phone line into it, and you could hear the dial tone and the right? So that's where we are with Bitcoin today. We're still in that dial up, trying to figure it out. It's still early, but 10 years from now, we'll be using, Bitcoin, pretty easily. And, as the Lightning Network and other networks get developed on top of Bitcoin and make it more user friendly.
Yeah. Being respectful of time, I wanted to hit you with the lightning round. Are you ready to accept the challenge?
Sure, let's do it.
Okay. What's the last television show you binged?
1883. I'll tell you my most favorite one that recently is 1883, which is based off Yellowstone.
It's the spinoff.
So it's the prequel to Yellowstone. So it's about how they got to Wyoming, and it's only 10 episodes. It's only one season, 10 episodes. It's great. The first couple of episodes are a little bit slow, but starting on the third one, you get sucked into it. And it's a great story about a pioneer life. And then what we're watching now is the Vikings one, Valhari, I think. Yeah. So that one's pretty good too.
I literally just finished Yellowstone last week, so thank you.
Okay. Yeah,
Appreciate
do
it.
1883, man. It's great.
Okay. Text or talk?
What is it?
Text or talk?
Oh, I rather talk to people.
Okay. Coffee or tea?
Oh, tea. I don't drink coffee. Yeah.
Basil or Musk?
Basil or what?
Musk. Elon.
I don't know what is that.
Elon or Jeff Bezos?
Oh, Bezos. Okay. Yeah, Elon Musk. Yeah.
iOS or Android?
Oh, iOS. Yeah. So do you know the history of that, right?
What?
iOS
No.
and Android.
No, please tell us.
All right. all right. So I was an early Apple stockholder too. And so I'd go to the stockholder meetings and, I always see, what was his, Eric Schmidt. Eric Schmidt was always at the stockholder meetings. So Eric was the CEO of Google. Okay. And so, when Apple developed the iPod, and then they were looking at doing the phone, Eric Schmidt at Google was like, hey, that's a really good idea. Maybe I should go buy a software system and incorporate that into Google. And so, he bought Android and started competing against Apple, even though he was on the board of directors of Apple.
Wow.
Oh,
Which
wow.
is, and then, Apple kicked him off. But he completely violated, I think his fiduciary responsibility to Apple by competing against them. So
I did not know that story. Wow. Next question, though. What's on your nightstand currently?
I have my iPhone charger and I have some lotion because my hands are always dry. So
Okay. NFT or not?
yeah, no, I can't figure out how to value NFTs. So there are utility NFTs,
Mm-hmm.
which probably have some purpose. Like if you're a gamer and there's only a certain number of items in that game, that has value to you probably. Like if there's only like 5 swords and you need one of the 5 swords to get you to the next level, there's probably some value there. But in general, like NFT is like art. I don't know how to value that. So I think it's too early.
Okay. And what's one word that comes to mind when you think about Bitcoin?
I think freedom. Freedom is the best word. This is freedom technology. It allows us to, live a free life. It's private. It's privacy, freedom, and and I think Michael Saylor hit it right with hope.com. It's hope for the future.
Yeah.
So,
Ryan, thank you for participating in our lightning round. And any last comments that you want to share with fans and followers?
yeah, I would say, like we talked about earlier, educate yourself. Take the time. I know everybody's busy, but go to hope.com. Go to, go get software. So it's the MIT thesis on how Bitcoin is the defense mechanism.
Mm-hmm.
So you can go to Amazon. It's software, not software. Jason Lowery, Lowery. It's his MIT thesis. Read that. Like I said, just educate yourself about what this is, because it's very, very important for human freedom and privacy, and like I said, it's hope for the future.
And where can the people find you?
I'm on Twitter.
Okay.
So Brian Estes 32.
We'll put a link. We'll put a link as well, and your website as well.
Yeah, and then like I said, our fund is offthechain.capital, and these charts that we mentioned on the stock to flow model and the Metcalfe's law, we publish those monthly on our website. So if you go to offthechain.capital and then click on charts, and you'll see these charts on there.
Okay.
Awesome.
Well, thank you so much
Thank you.
for participating with us and joining us. And for more information, go to sowhycrypto.com and Twitter, sowhycrypto. And please subscribe to the podcast, So Why Crypto. Brian, thank you.
All right. Thank you so much.
Thank you.
So why crypto?
So why crypto?
So why crypto?
So Why Crypto? Featuring Vishal and Quay.